Welcome everybody. My name is Jessica Yang, and these next 45 minutes are where we're going to talk about obtaining home ownership. Feel free to write any questions you may have in the chat. I've been a real estate agent for almost 4 years, licensed in California and Texas. I'm passionate about many things. Real estate and helping other people are the big ones. My beautiful guest today is Kristin Fox. Can you share a little bit about yourself, Kristin?
Yes, I can, definitely. My name is Kristin Fox. I'm a mortgage lender here in Austin, Texas. I have been originating mortgage loans for quite some time. I started back in 2004 and started as a mortgage loan originator. And then throughout the years, I actually wore many different hats. I've been an underwriter, processor. I was preparing closing disclosures during the COVID boom. But I am doing what I love, which is frontline origination, working with home buyers. And I work for a company called Guardian Mortgage. We're a division of Sunflower Bank, located right here in Austin, Texas.
I did not know that you wore so many hats and you had so many experience. I think that's really
Mhm.
good.
It definitely stemmed from wanting to understand the whole process. I probably spent about 4 years doing just origination, so sales. And then I was like, well, what happens when I hand the file over? Then what? And so I just really wanted to learn it all. I processed for a while, and I did that alongside. I continued to originate loans, but I was processing as well. And then when I moved to Texas in 2013, that opened up a lot of doors to do some underwriting and some other areas in operations. But my definite passion is on the sales side and working directly with the home buyers.
I think it's rare. I don't want to say it's only rare in like a home real estate industry, but finding people that are very passionate about what they do. Not
Mm-hmm.
everybody's going to be like that. So
Definitely.
we're putting this information out today because we believe that financial literacy and getting homeownership should be available to everybody. And only up until recently are women making more and buying more houses versus our great male counterparts. I'm 26 this year, and the wealth gap is just going to keep getting bigger. My generation is definitely getting priced out. This will only change really if we have more open communications and education and role models in the financial space. And so when I'm talking about people about housing for the first time, I kind of tell people like, oh, real estate agents, like I go and do all the fun stuff. Like I go get to know who the client is, like what their criteria is, where they eventually want to be. Whereas also you do the fun stuff too, but you also have to go ahead and pre-approve people, which is the literally even before me showing you homes, the very first step is getting pre-approved with a mortgage lender like yourself. What does getting pre-approved mean?
Oh, that's a great question. Well, honestly, it starts with a conversation. It is so important to have a conversation with your lender and have that opportunity to talk about your goals. What are you looking to achieve with homeownership? What's your short term and long term plans? Are you looking to build wealth through purchasing homes? Are you looking to be like one and done, buy a house, and that's where you're forever going to stay? And then also what you're comfortable with from a qualification standpoint. Sometimes what you qualify for and what you're comfortable with are two very different numbers. So it's really important to have that first conversation to discuss what considerations have been made as a home buyer or soon to be homeowner with down payment money. Have you saved any money? Do you need some assistance in that regard? And then also a mortgage payment. Have you thought about what would be a comfortable amount? What's your top dollar? Where do you want to stay? And that really helps drive the conversation when going through the pre-approval process. Now, once that conversation's had, we've had that discovery call, the next step would be to complete the application. And really, it's like a 15-minute questionnaire. You just answer a bunch of very simple questions: where you've lived, where you work, how much money you make, what you do for a living. And like I said, it takes maybe 10, 15 minutes. And then at the end of that, you do it all from your mobile device, your computer, or you can do it over the phone if that's your preference with your loan officer. And then the next step would be to provide the supporting documentation to go along with that application. If you say you make $5,000 a month, you would provide your pay stubs and W-2s or your personal tax returns to show the documentation behind that income that you've stated on your application. And same is true with assets and other things as well.
What would
Yep.
it look like if someone didn't have like a stable 9 to 5 job, right? Entrepreneurs or independent contractors, what do they need?
You said if they don't have say that question again, they don't have
Like
stable?
a not stable, but like a 9 to 5, your corporate salary.
Well, we see quite a few different scenarios and different types of employments, ranging from a traditional pay stub W-2 employment, and then the 9 to 5 job, maybe. And then also, we may have self employed borrowers where all of their income is filed through their personal tax returns because they are their own boss. In that case, most of the time, we start with personal tax returns. If that person does have entities that file their own corporate returns, we're in some cases going to look at those as well, depending on the amount of ownership that the borrower has in those companies. And then there's some non-traditional routes that we can take for entrepreneurs and individuals that are self-employed, such as bank statement programs where we can look at business bank statements or in some cases personal bank statements and see what the average deposits are over a period of time, 12 months. There's lots of different ways that we can do our analysis to determine what they qualify for.
When I see real estate questions posted up on Facebook groups or just anywhere on the internet, sometimes I think it's so situational. You don't know the person's case until you actually go to a mortgage lender and kind of be very microscopic in their lifestyle, right? Like
Mm-hmm.
one person's response and answer is going to be very different from another person. Maybe people do tend to generalize their challenges. And I don't know. I think really the first step is just talking to a mortgage lender like yourself to see if they are qualified.
Definitely. Well, it's a really important first step in the home buying process. You need to know because you cannot make an offer on a home if you plan to use financing to pay for it without first knowing what you qualify for. In fact, this is where your expertise is going to come in, Jessica. But a seller's probably not going to entertain an offer that doesn't have a pre-qualification or a pre-approval letter attached to it.
Right. Especially in these last couple years where
Yeah.
there was multiple offers. And if you go into a real estate transaction and let's say I'm representing a buyer, I would almost be wasting everybody's time if I didn't have someone that was already pre-approved. Because, right, let's say the offer of that person does get accepted, then
Mm-hmm.
you've already wasted some time and not doing that initial first step.
Yep,
And
yep,
so,
exactly. To finish that question about the approval process, initial conversation, the consultation, the application, supporting documentation, and then really a second conversation, usually to go over what the pre-qualification or pre-approval looks like, answer any questions that you might have. And really at that time, you get your golden ticket and you can go back to your real estate agent and begin the home shopping process.
I would say though, for the next couple months, be prepared to be engaged, and your real estate agent and your lender is going to be your best friend for a
Yeah,
couple months. You guys
yeah,
will talk multiple times, and I
yeah.
think that's what we're here for. Finding someone knowledgeable like yourself is really important in the process because not every lender is going to be the same. Not everyone's
Right.
going to
Oh
offer
yeah.
the same rates. Not all real estate agents are going to work the same either. You have to find somebody that's going to work for you, not only
Mhm.
by your side, but are they going to walk over the process with me? Are they going to break down numbers with me instead of just, here you go, figure it out by yourself?
Yep, it's really who you work with is really important. Definitely.
Right. And that's probably why you and I got into the business, right? There's just not enough people that actually there's a really big stigma around real estate agents and mortgage lenders where we're just trying to take everybody's money and rip everybody people off. And yeah, it really, there's good apples and there's bad apples.
I agree.
We all keep hearing about interest rates. What are interest rates, Kristen? And who is in charge of setting these rates?
$1 million question. Well, the good news is that rates have been trending downward at this moment, and so for the last several weeks, the trend's been in our favor, which is great because over the last couple of years, rates have been quite a bit higher than what we've seen in the prior years before that. What drives mortgage rates? Well, a lot of people think it's the Federal Reserve or like the 10-year Treasury. They'll think that those the Fed, it does have some influence. The Fed's in charge of short-term rates, like short-term lending rates and whatnot. But ultimately, it's about mortgage-backed securities or mortgage bonds. And so it's about demand. When mortgage bonds are up, the high demand or whatnot, rates will go up, right? And so it's just a matter of mortgage bonds is going to impact it. $1 million question, but where are rates, right? The mortgage interest rates, I would say in most cases, we're probably still in like the 7% range. But if you know all the tips and tricks and tools, and I can share a little bit about that. Just this morning, I closed a transaction where the rates were in the fives. That was exciting. They were super excited. And in fact, we lowered the rate an eighth of just a couple days before closing because we had some leftover seller funds that we didn't want to lose. So we lowered the rate a little bit more. And that individual took advantage of some incentives for affordable housing. And then they coupled that with a little bit of their own money, a little bit of seller funds, and all those things combined, they're 30-year fixed at 5.875. And really, 5.875 is a pretty good rate right now. Over the last few months and since the summer, we've seen rates, in the eights almost, right? I think at one point they were like in the high eights. I don't even know. I try not to look. I try not to live and die by the rates because it's more about the opportunity. Rates are higher, but that really actually helps the buyer quite a bit. Obviously, it's a more expensive payment. You're borrowing money at a higher rate, and so you're making your payment more expensive than what it would be if your rate was in the twos. But it's about what you're comfortable with from the housing expense and what opportunity that affords you by buying that home in a market where there's less buyers.
When people talk about higher interest rates too, they're saying that it is more expensive to borrow money. That really, if you think about it that way, when it's more expensive to borrow, then that really shrinks your pool of buyers. And so when the rates were lower, there were so many buyers in the market. That's probably exactly what happened during COVID. And that's the whole bidding war frenzy that happened. Mm-hmm. Right? Like people were over asking, even some like 100,000, 200,000. I actually had a listing that went like 250 over. And
it's wild.
Because it was just cheaper to borrow money at the time. But you said something just now that it is an advantage right now to get the higher cost because now you can leverage, you can actually negotiate with the seller. Right. So,
and get seller and almost, I don't know if you're seeing this, Jessica, but I am seeing seller concessions on every transaction on well-qualified borrowers who are not even buying their first home, they're buying their second home. And they're still, even though they're putting 20% down, they're still negotiating seller concessions on first offer, and sellers are paying it like every time. It's great.
Yeah, you don't have to sell your firstborn for a house anymore, or like donate plasma. It's a really different market versus like the 2 years prior, because I think there was a lot of, especially now, the news and the media is telling everybody high interest rates and the economy. Look, prices are very inflated, and the sad reality is that prices are just going to keep getting more expensive. If you look at the graphs, or if you look at data, like the 5-10 year ago, they just keep raising. They just keep rising. And so it's more so not, sometimes people aren't monetarily, if they are monetarily ready, they might not be mentally ready, right? Like there are some people that have the money too. But if your mindset and you're not at that level of thinking of changing your lifestyle is there, or maybe like you travel too much as a digital nomad, then maybe it's not for you. It really just depends on, it doesn't really matter if you go to a real estate agent, it doesn't really matter if you go to a mortgage lender. At the end of the day, I think the person has to know themselves enough to be like, maybe it is ready for me to settle down for a few years.
That's true in any market. I have a friend that told me that one of her biggest regrets was buying in 2021 because she felt like she had to. She had to buy because rates were low.
Mm.
And they waived the inspection, they waived all these things, and they bought like a bit of a money pit. There was problems shortly after close, and they're working through it, and they still live there, and everything's going to be fine. But she's like, gosh, I would have much rather have purchased where I had more control of the transaction than what I did in that multiple offer situation where I had to sign away and waive everything and not have those tools for negotiating. They really had some regret. And not of course not everyone experienced that. A lot of people bought in 21 that are really happy they did. But I think that just speaks to your point that you have to be in the right mindset. It has to be the right time for you, and you can't be so influenced from external factors like that because rates are cyclical. They are going to come back around. We don't know what the timeline is on it. It could be a couple years, it could be 5, 6, 7, 10 years. And do you really want to sit on the sidelines and wait for that? And that's why when we talk about interest rates in those conversations early in the process, I, I always say, of course, you can refinance and you probably will refinance, but you got to get comfortable with what it is today because you don't know how long you're going to be paying it for. It's an important realization that it's like you got to be committed.
Definitely have to be committed, even like from the start of it. And it is a very scary thing to do because it is one of the biggest transactions and there's a lot of money being involved. But if you feel ready, you talk to the right people that aren't going to push you, that are not going to pressure you. At
Mhm.
the end of the day, it really doesn't matter what the interest rates are. Like,
Yeah.
if you're in that life stage where you want to settle down or you want to start getting into the mindset of an investor or build your wealth that way, then you'll know it's time. But nobody else can tell you.
Right. Right. I
Yeah.
agree.
And
Definitely.
I think people like ask me, they're like, what do you think about this house? And I'm like, well, I'm not living there. That's not going to be me that's paying the mortgage payments. That's not going to be me living in that neighborhood.
Right. Right.
Well, let's say after the pre-approval process, you like the home and you want to put an offer on it, right? After you get to the point of talking to your agent and realizing that, hey, this is really the house that I want, this is really the best time to then negotiate if you want the sellers to repair the roof or if you want to get extra inspections done. There's something in the whole process called the appraisal. Right, let's touch on that. And what is the appraisal and why is it important?
Great question. The appraisal is done as part of the process to get your mortgage to finance the home purchase. And we use the appraisal as a tool to evaluate the home's value, right? And so, as a mortgage lender, we work with a third party that's independent from us that hires an appraiser, hires an appraiser to do an evaluation of the home. And what they're looking for is similar homes that have sold preferably in the last 3 months, but sometimes they'll go out longer if need be. If there's comparables not available, they can be as much as a year old, but typically they're within 3 or 6 months. And they'll use homes that are similar to the subject property. That's the property you're buying. If it's a 3 bedroom versus 3 bedroom or square footage, that are comparable or age that's comparable. Typically, there's three comparables in that report at least. And then they determine the home's worth. They make sure, I shouldn't say make sure, but it's a way to see if they're buying it for this much and it appraises for this much. Are those the same number? Does the appraisal support the purchase price?
Because it
Yep.
really makes sense. And a lot of the times, if the appraisal does not match what you guys are offering at, then that goes into the question of maybe the lenders, the mortgage lenders or the banks won't loan you on that price because they're not going to give a buyer the money to if it's
Mhm.
not really equating to what the offer is.
That was a real concern a few years back when people were offering over asking price, because sometimes the market was moving faster than the comparables could keep up with. And if someone's offering 50 grand over asking price and then the appraisal comes in and maybe it doesn't support it, maybe it's $20,000 less than the offer. the buyer, what we do as a lender is we use the appraised value or the purchase price, whichever number is less, when making our calculations. And depending on what you as a buyer are putting down, it might not have any impact on your loan whatsoever. For example, if you're putting more than 20% down and the appraisal comes in $5,000-$10,000 under the asking price, it doesn't really impact things from a lending standpoint. If you're getting a loan that's 100% financing, let's say there's no down payment. For example, a VA loan is 100% financing, or can be, and the appraisal comes in lower, you're going to have to cover that difference with your own funds. We can only lend to the limit.
Like it makes sense. The banks will only lend to the appraised. I don't want to say actual because
because the house is worth what you're willing to pay for it, right?
Yeah.
And so that report tells you what the house is sold for before you, but as soon as you close on that transaction, you've kind of moved the bar. You've changed the value of the neighborhood and the houses around you. But you can pay the difference in cash, increase your down payment. And Jessica, maybe you can speak on this, but you can renegotiate with the seller. Mm-hmm. Or you could, if you really wanted to, you could walk away. You could not buy the house if you were disappointed in the what it appraised for. I don't ever see that third option happen, but it's still an option. As the buyer, you're still in the driver's seat for sure.
There's something that I learned too. When you get into a real estate contract, the buyer has about 44 ways to get out of contract, and the seller has 2.
Oh, really?
So there's a book on that and everything. For sellers, if you guys really needed to get out of a contract, then be ready. There has to be a really big reason to. But buyers, do your due diligence. I think it really takes 2 motivated buyers and sellers to complete a transaction. Like you can't just have like a flimsy, flaky seller that just wants to see how much their house is worth. And then you can't just have a buyer that's going to lowball everybody. It just doesn't. Nobody gets anything done that way.
It's got to work together.
Everyone has to work together. And Kristin, you talked about getting pre-approved, but I guess we could think about the opposite. Like, what happens if someone doesn't or can't get qualified? Is it the end of the world? They'll never buy a house? Or what do you do?
That's a good question. My goal with every person that I work with is, well, one, to get them pre-qualified, right? And find out what can they buy, but what if they can't get pre-qualified? Whether that has to be, maybe that's caused by their credit score not being where it needs to be, or they have too much debt, and so they don't make enough money to support the house that they want plus the debt that they carry, or maybe they have a lot of collections. There's lots of things that could prevent a borrower from being pre-approved to purchase a home. And so what I do, if I'm not able to deliver that golden ticket to go shopping, I put together an action plan and show them these are the steps that you need to do to be where you need to be, right? And probably the most popular one, or the most common one that happens, popular is probably not the right word, but most common one is a lot of people have quite a bit of revolving debt right now. That means credit card debt. And credit card balances, high credit card balances, can really drive down a person's credit score. And so we'll set forth a plan to pay some of those balances down, not always all the way off, but just down a little bit in hopes to boost their credit score. And so we'll maybe work together for 3 to 6 months, just depending how much resources the borrower has available to them as far as funds, and whatever amount of time that they need. And then we'll work with them to boost their credit score to the level that it needs to be to meet their needs for the loan. That, or paying off collections, whatever the action plan is, but try to create a path forward so that they have a way. Yep.
Right. And some mortgage lenders don't even go work with you through an action plan. They'll just be like, oh no, you can't be approved. If, for whoever's out there listening too, if your goal is to own a home, just know that it is possible, and know that there are steps and actions in order to do so. Like Kristin was saying, with the credit scores and credit history, stuff like that, it can be patched, but it's never going to be instant. Real estate and buying homes and attaining your wealth that way, making money is never instant. And if it is, be careful. The quickest transactions like I've been a part of, they're lasting 3 to 4 weeks, right? That's like with an all cash buyer. They're very well approved and they know what they want. But even you said working with someone 3 to 6 months, sometimes you do work with some people for more than a year. And that's okay. That's just, we're all in this journey together.
Same on the mortgage side. We'll have some people call. I'll have someone call me. Their agent will send them my way or something. They'll call me and they're like, "We want to put an offer on a house. Can we get pre-qualified?" You do it same day. Next day they're under contract, and then 3 weeks later you're closed, and it's just like boom, boom, boom. It's super fast. And then other people, maybe we're on that action plan, and you work with them for a year or even longer sometimes. But it's everyone's journey is a little bit different.
I think that's the most important thing, knowing that everybody's journey is different and that's okay. Because I
Yeah.
think we want a house now, tomorrow, like this month or this year. And it's like, well, let's see, like, what are the steps? We all have to work together to see if you are qualified to do so. Let's talk about the 2008 housing crash and why that happened. And do you think there's going to be a crash anytime soon?
Ooh, ooh, housing crash. Why did it happen?
2008.
A multitude of reasons. In 2008, I think the reason that happened was there was a lot of risky lending practices taking place prior to the way that borrowers were getting loans. There was less verification happening, lower. It was just risky lending practices, and borrowers that were not very well qualified were getting these mortgages, and then home values were artificially inflated. And unfortunately, there was some lending practices happening where appraisers would be influenced to maybe hit a certain number to make a mortgage loan work. And in combination with those risky lending practices, probably some not so good behavior happening with some of the people in the industry, and then those borrowers not being really well qualified. And a lot of the loans that were being originated were what were called 228s or 327s. And that 228, which was a very common product, it's fixed for 2 years, only 2 years. And then at the end of the 2 years, it adjusted, but it only adjusted upward. And where now today's arms are very different. Today's arms move with the market. If an individual were to get a 5-year arm, at the end of the 5-year arm, if rates have dropped, your mortgage rate's going to drop, right? There's a floor, there's a margin, there's some components to it that actually moves with the market. Where back then the rate only went upward and there was a schedule. It was like at year 2, it's going to go up by this and then by this and so on. And those loans would go into an adjustment period and borrowers would go to refinance, but home values were dropping. It had no way of refinancing out of the loan because there was no equity in the property. And then they could no longer afford the loan because the payments skyrocketed. That's just one example, but lots went into that. And I do think that what we're experiencing today is very different than what we experienced back then. There's still a housing shortage. There's low inventory, which means there's still a lot of buyer demand because there's the few people, or I should say the few, but the people that are out there buying, they only have a small selection of homes to shop. And because of that, that's protecting home values. We're not really seeing a big drop. And here in Austin, I really see for the most part, people do offer maybe a little bit below asking, but I think that's pretty normal negotiating tactic, right? And sometimes you offer a little bit under, you ask for some seller concessions, then the seller meets you in the middle, maybe comes back at the asking price and gives you those concessions. And I'm assuming the listing agent takes that all into consideration when they set that price. They're prepared to negotiate. I feel like that's a really healthy market. I think what caused the crash back then doesn't exist today. So fingers crossed. I know what we were experiencing the last couple of years wasn't sustainable. Home values like doubling. Could you imagine if that trend continued? Nobody would be able to own a home because our incomes, like the everyday person's income, is not doubling. How would you be able to keep up with that?
I mean, even when I look at rentals, though, apartments and stuff, these apartments are trying to get people's income 3 times the rent. No, I'm looking at some of these apartments for some of the tenants that need to move in, and I'm like at a 1,500 or 1,700 a month. They need to make about $60,000 a year, and I was like, that's still quite a lot for the
Hmm.
average American. I'm like, why not just go get a $200,000 house? And
Yeah.
that's totally viable here in
Yeah.
Texas. I come
Yeah.
from the California market, San Diego, and the median home price is like $800,000.
It's wild. That's
Yeah.
wild. And
Hmm.
here in Texas, we have so many great programs to assist first-time home buyers. My bank has some of our own programs that we put out for affordability. Like I was telling you, the buyer this morning, they were able to get a reduced interest rate. But then in addition to that, we work with organizations like T-Shack or My Texas My First Home, and buyers can get 100% financing and some of their closing costs covered so that they can be homeowners and not have to put a huge down payment, and really can make a big difference owning a home versus renting a home.
1% down payment assistance programs. The information is out there for people that really want it because now
Yeah.
we have the internet. Now we have podcast shows or like other people educating other people on it. Maybe if like we had TikTok educational tips, maybe 2008 wouldn't happen. Maybe it did. I don't know. To say what happens if somebody has a foreclosure or they're bankrupt, can they still get a home?
Not for a while. In most cases, for a traditional conforming loan, you're going to have a 7 year wait. It's a little while. I think I'm drawing a blank on government. I think government's 4 years, maybe it's 5. We don't see a lot of foreclosures. We really don't. But usually bankruptcy and foreclosures for a traditional conforming product, you're
Right,
going to want to be 7 years out. But that's why it's just, you got to have the conversation. And if we have that conversation and you're like, I just filed bankruptcy yesterday, well, then I'm not going to have you apply for a mortgage. We're going to
right,
go over the timelines, and it might depend on what kind of bankruptcy this is bankruptcy, obviously not foreclosure, but they're
right.
similar as far as significant derogatory events. But depending on, did it go into foreclosure and was there a sheriff's sale, or were they just down on the mortgage and foreclosure proceedings started? How has their credit recovered from that event? Have they reestablished credit since that event in the case of bankruptcy? And so there's some discovery that needs to happen. And so for each person, it might be a little bit different.
Right. It's not the end all be all. There
It's not the
is.
end all be all. No, not at all. Mm-mm. Bumps in the road, and it's nothing to be ashamed of. Everyone has a past, and there's always a way forward. And the great thing about credit is, like, over time, it kind of erases itself. So if you have like a really spotty pass, just just keep on keeping on, and eventually, get a small little credit card, make those monthly payments on time, and your credit will heal itself. It could be like a 7 to 10 year project, but that's nothing compared to a lifetime, right? It's not the end all be all.
And there are some like pros and cons to owning a home versus like just renting. The very big differences and like the really big advantage of owning a home is that at least you get to get equity and
Hmm.
perhaps if you want to sell it later or pass it down the family line, like that's
Or
something you
turn
could
it
do.
into an investment
Oh
property.
yeah, turn into investment property. And I say this sometimes too with first time home buyers. They are able to get a 3.5% down FHA
Yep.
plan, right?
Yep.
Have you heard of house hacking? And
Yeah.
is it popular? And I totally vouch for it, but I would love your opinion on it.
Honest truth. I hear more about house hacking on social media than I do in real life.
Okay.
I think that it's a really great, I think it's great. I think that you buy a house, live in it for a year, repeat, 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 right?
Hmm.
Turn into investment property and then repeat. I do have what I consider to be some savvy first time home buyers that are only shopping for duplexes because they want to live in one side and rent out the other side. And this one particular gal I'm working with wants to live in one side, rent out the other side, and renovate. And then the one that she's living in, and then flip, and then live on the other side and renovate, and then eventually make it a total
Yeah.
investment property and then move on to the next house. And
Yeah.
I think that's so cool. When I hear people that implement that plan, I think they might be the one percenters. They're going to be the people taking the initiative, the go getters, and they're going to have some pretty big wealth built up in real estate by doing that for sure. I think it's entirely possible, and people are doing it, but not everyone.
Risky to do anything, but if you take no risk, you get no reward.
Yeah.
I saw a post the other day, someone talking about 401ks and like Roth IRA. And I'm like, honestly, at the rate the economy is going, not too optimistic about the government matching your 401ks. And like for people to solely rely on the government for like a better life, I just think that people need to start taking matters into their own hands because
Mm-hmm.
the government's not going to really look out for anybody
Yeah.
themselves.
Well, my opinion on a 401k is if your employer matches your contribution, you should do it.
Right.
But outside of that, and that's just my personal opinion. I don't have any formal education or ability to like
Oh
make
yeah.
recommendations on this. But this is just what I do. I contribute to the point where my employer matches because that's free money.
Right.
So if my employer is going to match, then I'm getting that free money. But everything else that I'm investing, I'm putting into avenues that I think are either they might like have, like you said, they might be a little bit more risky, but they have more
Right.
reward, just depending, what. I'm
Right.
not really like 100% sure to say what I'm doing because my husband does a lot of the investment.
That's a good hack to have
Yeah,
like a
yeah.
husband to do it.
You have your husband do it. No, I'm just kidding. I got
Yeah.
access to it all. I can see it. I know where it's going, but you're trying to be diversified. A little bit of money here, own some real estate, a little bit of money over there, just trying to save.
We have a couple minutes left, and I think I want to end it with there has been headlines of the Federal Reserve wanting to cut rates next
Yeah,
year, probably like 6 times, which I was just like, okay, I hope that happens.
yeah.
Do you see another bidding war potentially happening? Or because right now, what happened was people are in 2-3% mortgages, and really like your asset and like the biggest for you was not the home. Your biggest advantage in getting that was your loan. You have a very nice loan that is cash flowing some people really good amounts of money. Now, if they start lowering the rates, that also means that these people can start selling and buy something else that they want. What do you think? Do you think there's going to be a bidding war again, or?
Well, I mean, as I was saying earlier, the Fed doesn't directly control mortgage rates, but eventually, like banks and lenders follow suit, right?
Mhm.
They want it for borrowing money, and I think that with the understanding that the Fed may reduce rates, what is it like you said, 4 to 6 times or up to
Mhm.
over the 6 times next year? If we see a steady decrease on the Fed rate, we're going to see mortgage rates come down, which is exciting. The interest rates that were in the 2% range, that was a result of a global pandemic. I don't think, unless we have a more catastrophic, I don't even want to say the words, but like a war or another pandemic or something like that, I don't think we'll see interest rates at that low level like we did during the pandemic. But if we see rates drop into like the 4% or 5% range, I think as soon as we see rates get into the low sixes, into the 5%, we're going to see so many people that are on the sidelines go, I'm comfortable with that. I'm comfortable paying 6%.
Even now, I am getting a little bit more activity on people inquiring and being more serious as they know
Mhm.
that next year is about to come. And if they do cut the rates, then it makes sense for them to
Mhm.
finally get into something. What happened with COVID, and you said it being a global pandemic, like that was rare. I don't think
Yeah.
people think
Hopefully
that.
that's our once in a lifetime thing and doesn't happen again.
Hopefully not. It was the weirdest thing to do. I started
Mhm.
my career the month of quarantine, and it was like
Yeah.
the weirdest thing for me to be like, does anybody want a house? And then everybody's having the worst time of their lives or they're shut down. And I'm still out there trying to like sell a house, right? Because it was still essential. It's really like, such a dynamic. With the rates going down too, more and more people are going to be able to buy, right?
Yeah. Yes. But to answer your question, Jess,
Yeah.
yes, it's going to create bidding wars. And the reason is it's very simple. More people are going to be in the market, more buyers are going to enter the market. However, we still have a ton of people sitting on 2.75% 30-year fixed mortgages that are not going to move. Until the builders build more houses, we're still going to have a shortage. right? And so we have low inventory and we're going to add more buyers to that equation. Now, some people that own homes are going to sell. There are people that need to sell or want to sell for whatever the reasons are, and they just are hemming and hawing, and they haven't made their move. If rates move just a little bit, little by little, we'll have more people sell and more people buy for sure.
Ending question. What
Yeah.
do you suggest our future buyers or anybody that's even thinking about getting into the market prepare themselves for? Like, what is your tip?
Well, you need to know what you're comfortable with. So you need to start thinking about what you're comfortable with on monthly payment. When I first talk to buyers, I'll ask them, how much do you want to put down? And they'll say 10%. Well, put 10% into it. Don't tell me percentages. Tell me dollars. How much is it? $40,000? Is it $4,000? Be thinking about how many dollars you have saved and what you'd have available to put towards the transaction, what you're comfortable with. Thinking about what you're comfortable with as far as a payment. Those two numbers combined are going to set a budget for you. And that is what should drive you when you go out. And then the next question is, will you be approved for that? And so it is important to have a conversation early with a mortgage professional to make sure there's no roadblocks or problems that are going to prevent you from homeownership, so that you can have that path forward and know exactly what steps you need to take to get to where you want to be when the time's right, when you're ready.
This was so fun. I think time
Yeah,
time flew by really fast.
it did.
Great conversation. Right? I would love to have you on another time. And
I'd love that.
well, have a great weekend. And I'll see you.
All right, sounds good. Have a good one.
You too. Bye.
Bye.